Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on Restaurant Brand Asia. Our analyst maintains buy on Restaurant Brand Asia with an unchanged price target of Rs 150. RBA's operating performance was ahead of expectation, mainly led by higher than expected consolidated EBITDA margins of 11% versus expectation of 8%. Revenue growth of 15% was largely led by store addition. India's business SSG guidance trimmed to 3% for FY24, maintained at 8% for FY25 onwards. Gross margins to improve by 200 bps over the next 2 years. Indonesia business to cash break even by FY25 end. Already break even at restaurant level EBITDA in quarter 3. Popeyes is gaining strong traction with revenues improving quarter on quarter. Stock trades at 26 times FY24, 18 times FY25 and 13 times FY26 EV by EBITDA. Next we have an update on NAM India. Our analyst maintains buy rating on NAM India with a price target of Rs 650. NAM India reported overall strong performance in quarter 3. Core profit before tax grew by 23% year-on-year and 8% quarter-on-quarter, led by strong growth in QAAUM, which was up by 29% year-on-year and 8% quarter-on-quarter. It has been witnessing strong growth across segments, leading to strong market gains on the back of buoyant markets. Also, its equity fund have been delivering better performance in the last years versus peer, which is driving improvement in net inflows. Impact of lower equity yields on core revenue is expected to be broadly managed by higher growth in AUM. We expect Nippon to deliver better than industry AUM growth. At the current market price, the stock currently trades at 29.6 times FY25 and 27.1 times 26 estimated EPS. The stock has outperformed the broader indices in last 12 months. Last we cover NTPC Ltd. Our analyst maintains buy rating on NTPC with a revised price target of Rs 365. NTPC plans to add another 16.8 gigawatts of thermal capacities beyond FY26, apart from under construction thermal capacities of 10 gigawatts. RE capacity targets also remain strong at 15 gigawatts by FY26. To fund this expansion, company plans to incur the capex of Rs 22,700 crores for FY25 and Rs 26,300 crore for FY26. We believe that addition of thermal power capacities would drive regulated equity base and provides earning growth visibility. Overall, we expect NTPC's regulated equity to PAT to grow at a decent 10% to 11% CAGR over FY23 to FY26. Moreover, focus on ramping up of RE portfolio and new areas of green hydrogen and battery storage would be key re-rating catalyst over the medium to long term, as would not only drive growth but also improve ESG score. At current market price, the stock trades at attractive valuation of 1.8 times FY25 price to book value and offers healthy dividend yield of 3%.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.